only on Bloomberg Quint.
Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. Good morning, Agam.
Good morning, Darshan. I'm Agam Vakil, and here are the headlines. Markets look for direction. The equity benchmarks trade with marginal moves. Volatility too remains flat. But open interest surges in Piramal Enterprises and Vodafone Idea as traders cover their short positions in their respective stock futures. Praj Industries jumps as much as 10% in early trade after the company's December quarter results beat analyst estimates and dividend announcement. And it's an earnings-heavy day. Bajaj Finance, HDFC Limited, Bajaj Finserv, HCL Technologies and Axis Bank will be the 5 nifty companies which will be reporting their earnings today. But first up, let's put the spotlight on earnings, and we have Intellect Design Arena, which has reported a 32% growth in the top line in the December quarter. I caught up with the chairman and managing director Arun Jain to get a fine print of the earnings for the quarter gone by, where we began by asking him about the quarter's deal wins. Listen in.
The 12 deals we have, I think what Intellect is now getting a top positions to win this deal as the largest bank of UAE is selecting Intellect for their digital transformation. I think it's a very big milestone. Similarly, largest bank of Bahrain, largest bank of Kenya. So all these large banks which are now choosing Intellect, we are becoming undisputed leader, gaining almost last 4 quarters, we are winning 80% of the deals which is going to market. Now each deal value, they are strategic in nature, they are above 20 crore in nature, and once you enter there is a possibility of going into digital spaces as well as product processor and core banking kind of spaces. So that's a kind of a possibilities are there. So for the investor, if I look at 5 levers which is required for a strategy for the product company, our teams have shown tremendous acceleration on that. Our technology architecture is superior. My GTB is #1 business in the global transaction banking. My license revenue growth is 79% year on year. My cloud and subscription revenue is 5% of the total revenue. And my type of deals which I'm winning is determining the type of market share we are accelerating to. So these all the 5 metrics are important for our business.
Right. Mr. Jain, from what we understand is that you're getting more and more revenues from advanced markets. And on the other hand, your revenue collection from emerging markets has been reducing to a certain extent from the revenue spy point of view. My question really is that, is there where the focus lies, or is this just, I would say, situational and the way things have carried on, and then you are actually looking forward to business from everywhere? My question, I suppose, is more towards your strategy.
Yeah. So the articulated strategy was that 2/3, so in IT bucket of spending, almost 70% of IT spend in financial technology business comes from the advanced market, while 30% spend comes from the emerging market. So we want to make our ratio in line with that. As of now, 62% revenue coming from advanced market. I think 2/3, 1/3 will be the good ratio for us to look at it between advanced market and emerging market, in line with the financial technology spend.
Okay, right, Mr. Jain. Then I'm looking at near 40% growth when it comes to your top line. Well, for the first 9 months, 38% to be precise, if I'm not wrong. As we move into the next financial year, if you disregard what we're seeing in this particular quarter, I reckon that it may be hard for you to keep up with 40%, but can we still expect robust growth to continue? And my question also is to do with the base effect, or do you think that this growth rate can be sustained?
Yeah, so I think the growth rate is sustainable because of the pipeline is healthy. $500 million pipeline is there, and the more go live goes, more customers can come in. But I think the one point which we want to bring in is that cloud and subscription revenue comes with a lot of lag revenue. So there is a lag gets created. Though the value of the cloud revenue, I was speaking to the investor yesterday, they have a lag when you sign the contract in December. We don't book single revenue pie in December because that revenue will start kicking in when the customer goes live. But 10-year revenue of the customer, the total TOC of the customer in a subscription revenue is almost 2.5 times larger than the license TOC. So there is a accounting element, but our robust growth from acceptance perspective, we are confident. But how much we can look at it from the cloud and subscription revenue versus booked revenue. As of now, we balance the business, that GTB business, we are booking license upfront, while for Seek, which is insurance business, and GCB business, we are looking more subscription deals. So this is giving a balance of it. But that number will come back to you once our business plans are clear for 1920.
Sure. And a final question then, Mr. Jain, a word on your margins and profitability in general. Do you foresee any challenges going forward? I know that you have a robust deal pipeline, but anything that can work against margins and profitability going forward?
No, margins are improving continuously as we initially projected. Our idea is Intellect 2.0, which is a 3-year agenda. By 2021, our margin should go between 15 to 20% on EBITDA margin level. As of now, it's 11%. So it should be between 15-20% we should be able to reach in next 2 years.
Okay, back to the F&O show. Let's take a look at the stocks that we will be discussing today. First of all, we will discuss counters like Ultratech Cement has managed to rebound after falling almost 12 to 15% in trade. We'll talk about Escorts, one of the top losers on the F&O. Yesterday also fell post a weak set of numbers. The commentary extremely weak. Bajaj Finance will come out with numbers today. Jubilant Foodworks will come out with numbers today. So we'll find out what the F&O positioning is ahead of the numbers. Wockhardt disappointed with numbers yesterday. Bank of India came out with a big loss but has managed to recover from the lows of the day. Wipro and Chennai Petro are the other counters that we want to talk about. So before we get our guest on the show, here's a reminder, if you have any queries regarding the stocks that we just discussed, you can call us on 0224540441 or write to us on Twitter, Facebook with the AskPQ hashtag. You can also write to us on YouTube in the comments section. So let's welcome our F&O experts for the day. Nirav, Chheda of Nirmal Bank Securities and Brijesh Singh of StockAxis join us on the show. Good morning to both of my guests. Nirav, I'll start with you. Good morning. What's your view on the Nifty? It's been rather volatile of late. What are you recommending your clients to do on the Nifty?
Yeah. Good morning, Darshan and Agam. See, on the index front, it is continuing to remain in range. But in the last week, it has broken the 50 and 200-day moving averages. Also, you know, the base has shifted lower from 10,700 odd to 10,500. That is a negative. You know, the PCR has come down, the VIX has gone up. So all in all, you know, you're looking at negative signs in Nifty. You know, however, with VIX now going up towards the 19 levels, you know, you cannot really say that Nifty will actually fall below the 10,400, 450 level, because with high VIX, there's a high probability, you know, of a bounce back as well. So I believe, you know, around the 10,600, 10,550 levels again, we can see a bounce back in Nifty. You've seen that in the past few weeks, and that is why, you know, trading in Nifty can be futile at this moment. I'll be looking at signs of reversal around the 10,600 odd levels, looking at volumes very closely at those levels as well. So as of now, there's no trade on Nifty. However, we remain cautious.
No trade on Nifty, that's what Nirav is saying. Brijesh, good morning to you as well. Is that your opinion too? Do you want to wait for a few more, you know, technical variables or data to develop before you can take a trade here?
Good morning, everyone. See, Agam, from a past week or a couple of week scenario, Nifty was been trading in the range of 10,800 or say 10,850 on a lower side, followed by 10,950 or say 10,985 on the higher side. But it was not able to cross that 11,000 mark, which was been acting as a tough resistance. And anyhow, Nifty surpassed the level of 10,950. We were seeing a big selling pressure. And as soon as on the Friday, when the Nifty had broken open that level of 10,840 or say 850, the range, it made a confirmation that we are heading for a downside. Now the previous swings lows would be acting as a support. I have a little bit neutral to a bullish view, a contra call. Right now Nifty is trading somewhere around 10,640 on the 670 on the future side. If anyhow Nifty trades below a level of 10,650, one can go for a long side with the stop loss of 10,600 or say 10,610 and play for the target of 10,740 to 10,750 zone. So I'm looking Nifty expiring in that level of 10,750 here and there.
Okay, let's talk about stocks then. I'll start with you only, Brijesh. Which are the stocks that you want to speak about today?
Darshan, no doubt, if we talk about stock specific, Escort is looking weak, and we have seen from a chart and even from the commentary which has been told by the company guy. But 640, 645 right now the stock has been trading. The previous swing low was somewhere around 659 or 660. It should not be had broken. Now the increase in volume and the previous swing low breaking, which is making a chart or trading towards the negative side or a bearish side. So somewhere around 645, one can go for a sell side with the stop loss of 600 and 660 and play for the target of 610 to 600 zone. I'm looking time frame for holding this counter would be 2 to 2 trading session as such.
Okay. Nirav, what about you? What stocks are you trading on, betting on today?
Yeah, see, both are sell calls. The first call is a sell call on HDFC Limited. If you see, after a period of about 3 months, this stock has broken below its 50-day moving average, which was always a good support area for this stock. It was around 1960 that it broke that average. So I believe, this stock can come down towards its support now of about 1880, 1890 odd levels where the 200-day moving average is placed. Now with this being the expiry week, a lot of open interest is up and down, so you don't want to look very closely into it at this moment. I believe this stock has broken down and one should be selling into it. The second one is a clear sell call on Godrej Industries. If you see, this trend of the stock is downwards. It continues to make a lower top, lower bottom formation. Some aggressive shorts being seen in this counter as well. So I believe one can sell this counter with a stop loss of about 515 for the current series futures and a possible target of about 480.
Okay, so those are the counters that have that our guests have spoken about. Let's get in a management. It's been a mixed show from Godrej Properties in the December quarter, with the company reporting a top line growth of 27%. Sharad Dubey got up with the executive chairman Pirojsha Godrej to get a fine print of the earnings for the quarter gone by, and started by asking him about the company's JV with Hero Cycles. Let's listen into what he had to say.
This is an exciting new project we've partnered for in NCR, which is, this is in a very, very prime location on Golf Course Road in Gurgaon. We believe this is one of the best sites in all of NCR, and we've partnered with Hero Cycles and our fund management arm to develop what we hope to make, a landmark office development in the market. This will be a, ultra luxury office development with a little bit of mixed-use retail at the base. So I think that's the project's obviously at a very, very early stage. We've just concluded the partnership over the last month, and we're now getting into the planning and regulatory approval phase of that project.
Okay, sir, what is your outlook for the Godrej fund management which you have started? Like any strategic tie-ups you're looking for going into FY20?
Yeah, Godrej Fund Management is now a separate real estate private equity arm of the Godrej Group. We see a lot of opportunity to make new investments in various sectors that we might not choose to do from Godrej Properties. So far we have about $1 billion of assets under management that we've been able to raise in 2 residential funds and 2 office funds. We already have several strategic partners in the business and are looking to scale that over the next few years. But certainly it's a business that we're quite excited about and see a lot of opportunity in.
Can you give us the details about your project pipeline and the order book standing at right now?
Yeah, we had a very good third quarter, largely because a lot of the launches that we'd planned to do did in fact take place. So we had 6 new launches that we delivered in the third quarter, which helped us deliver this best ever quarter for residential bookings that we've ever had. The fourth quarter, we also have another robust launch calendar. So hopefully, if we are able to launch all of those projects, I think we'll end the year on a very strong note. Typically we start talking about the visibility for the next financial year during our fourth quarter results presentation, as we get a clearer visibility on which projects we believe will receive regulatory approvals in time for them to be launched. But certainly, the company's outlook right now is extremely bullish. We're quite happy with the level of traction we're seeing in our new project launches. We believe there's a fairly unique opportunity to quickly expand the scale of our business from a business development perspective, given the current weakness that many developers in the sector are faced with. So I think you will see, hopefully, a very large expansion in the number of launches the company is able to do over the next couple of years.
Okay. In terms of bookings, which geographical segment did you actually, maximize your bookings at? If you can give us a segment-wise kind of a contribution of bookings.
Yeah, so the new launches in the third quarter were quite well distributed geographically. In Bangalore, for instance, we launched our first ever plotted development project, and we're able to sell about 750,000 square feet of space there with a value of over 250 crore. Here in Mumbai, we launched a new phase of a township project we're building in Panvel, and that project also received a very strong response with about 400,000 square feet of sales worth a little under 300 crore sold over there. In NCR, actually, we had 2 new project launches during the quarter, one each in Gurgaon and Noida. Cumulatively, those 2 projects delivered sales of about 600,000 square feet with a booking value of over 350 crore. We also had smaller but also very successful launches in Pune, in one of our new phases of our project there, and also in Ahmedabad, where we launched after several years a new phase of our project there. So I think the geographical distribution of sales during the quarter was extremely positive, with strong launches in all 4 of our focus markets of Mumbai, NCR, Bangalore and Pune, and also a successful new launch in Ahmedabad.
Yeah, and one more thing. In December, there were the bookings of flats were actually slowing down on the industry perspective, hoping for a GST reduction in ready-to-move-in houses. So did you feel the heat going into December, or you had a kind of an uniform bookings all throughout the quarter?
No, I think actually December was by far the strongest month of the quarter for us, because that's when a lot of the launches happened. So that was actually a very strong month. I think it's important to keep in mind that the potential GST reduction you referenced is for completed homes, whereas most of what we're selling is actually under construction homes. All our new launches are of projects that have yet to be constructed, let alone be delivered. So I don't think there was any effect on the launches from those discussions.
And the last question is, what's your margin outlook going into FY20?
Well, I think margin is a factor of many things in our industry. Also, the accounting rules for projects, differ by structure of projects. But certainly on an overall basis, we expect to see margin enhancement for the company, as most of our new projects are in profit sharing structures, or structures similar to profit sharing, which are inherently higher margin structures than revenue sharing and outright purchases. So we do expect to see margins do well. But again, I think the accounting in the industry, with the 2 major changes, one, the shift to project completion accounting, and Ind AS calling for joint venture projects to be accounted for as single line items, does make sort of reported margins a little open to interpretation and quite volatile.
Okay, that's the management of Godrej Properties, where they suggest that, the December month has been very strong for them. They're positive with respect to the outlook going forward, currently trading at 747, one of the more preferred stocks in the realty space as against many others which are really under governance issues. But with that, we shift focus to a handful of stocks that we'd like to highlight. I'm going to start off with Bajaj Finance. Now, yesterday's day of trade was a crucial one, because just for a moment, perhaps, graphs, Bajaj Finance did go below the mark of the 200 daily moving average. It's currently trading below the 2500 mark. It has, of course, recovered from those levels, still below the 50 DMA. But with respect to, well, rollover standing at around 26%. There has been no real increase of position taking. In fact, from what we understand, in January, there's been a decline of around 23%, and in February has seen a decline in open interest. Ahead of its earnings, well, I reckon traders will be hesitant to take positions here. But I'm going to take it over with our experts. Nirav, let me take up Bajaj Finance with you. How would you play the stock?
See, the level to watch out for in Bajaj Finance is 2460. It is a very good support area for this stock and a weekly support at that. So, in case, near Thursday, Friday, if you get Bajaj Finance below the 2460 odd levels, that means the trend has changed to negative, and very likely Bajaj Finance can again, come down below its 200-day moving average that you said about. It can come down towards the 2200, 2000 odd levels if it falls below the 2460 levels. So that is the level to watch out for. I'll be looking to short it only below those levels. As of now, there is no long trade in this.
Okay, very interesting is if you look at the trade today, a lot of NBFCs have started to give way today. If you're looking at the top losers, apart from an Escorts, which is down almost 6% in trade, there is Shriram Transport, there is Repco Home, there is Manappuram, Devan, India Bulls, Piramal, Muthoot Finance, Chola Investment. So NBFCs has seen a very bad day in trade. Brijesh, which is the best, if someone wants to take a short on the NBFC space, which is the best short?
Manappuram, one can look out somewhere around 92.5. The stock has been trading. Previously, it was been trading somewhere around 99, and it was hovering towards 99 and 100 zone. With the negative divergence on the shorter term time frame followed by the increase in volume, it indicates the little bit pain has been still left. So if someone wants to play for a short side, keep a stop loss of 95 or say 94.5 and look for the target of 87 to 88 zone from where the stock has previously bounced back. So at least I'm looking stock touching 87 to 88 zone in coming days to come.
Okay. Well, moving on to Jubilant FoodWorks as the other stock which has been consolidating over the past couple of months, and what we've also seen is very little traction right now. It's at around 1211. Well, from my initial estimates that I was running with the poll of a handful of analysts, the same-store sales growth is expected to be anywhere between 10 to 15%. Now, these earnings are coming in tomorrow, and quite naturally we will have some positions being taken, or perhaps traders will again be hesitant to take any positions since we have earnings coming tomorrow. But it's currently at 1211, decline in January series open interest, but February is seeing a little bit of an uptick now. Again, with respect to rollovers at just 15%. Brijesh, coming back to you, how would you play Jubilant FoodWorks right now?
See, Agam, 12.11 the stock has been trading, and 2-3 times the stock had bounced from a level of 11.55 or 11.60 zone, and still it's been acting as a strong support. So till that level doesn't break on a closing basis, one can use for an and it dip below 1200 for a buying with the strict stop loss of 1150 and look for the target of 1275 to 1290 zone where the tough resistance lies, because the 200 is simple moving average value rounds at 1298 zone. So I'm looking at least stock would be trading in the zone of 1150 on a downside followed by 1300 on the higher side. So if we are able to get stock below 1200, one can look out to buy this counter with a stop loss of 1150 and look for the target of 1290 or say even 1300.
Okay, the other counter that we want to talk about is Wockhardt. Wockhardt actually was down 10% in trade yesterday. Today managed to recover. Very, very weak set of numbers. Let's see what Wockhardt is absolutely flat in trade. Nirav, what should one do in Wockhardt? Yesterday was down 10%. Is a bounce back possible, or is it sign of more weakness?
Yeah. Yeah, it has broken below its all-time, in fact, 52-week lows in the yesterday's session. I believe it can come up toward the 460-odd levels, but that is where you sell again. The chart overall structure looks weak. I believe it is in a lower top, lower bottom formation, and a lot of shorts have been built up, over the past few sessions. It can come down towards the 410, 420 odd level, so one can short around 460, keep a stop loss of around 480 odd.
Okay. Well, on that moment, I will thank both our experts, Brijesh and Nirav, for joining us and taking us through their views. For more updates on the F&O space, you can, of course, check our website, bloombergquint.com, where we have plenty of data. And on that note, it's a wrap on this edition of the F&O Show, but we get you a conversation with Sanjay Sethi of Chalet Hospitals on our special series, IPO Adda. Stay tuned to Bloomberg Quint Live.